what's going on with interest rates, what's going on with Trump. Okay, I don't know if you guys follow the news. Obviously, Trump is everywhere. He's a madman, and whatever he wants, he gets. So, what he came out and said yesterday is he wants to lower rates. He wants to lower rates by a full %, guys. So that would be insane. So we all know Trump. He's gonna do what he wants, and if what he wants isn't getting done, he's gonna fire the person in charge of that department, and he's gonna put someone in charge that's gonna get what he wants done. So if Trump wants to lower rates, he's gonna lower fucking interest rates. That's just what's gonna happen. So let's just go down this rabbit hole. What happens if rates go down by a full %? Right now, rates are like 4.25%, 4.5%. So if they drop by a whole %, you're looking at a 3.5% rate on a 30-year fixed loan. Even lower of a rate if you're doing like an adjustable or something like that. Like back in 2013, when I bought a house, I got an adjustable loan at 2.3%. So if we get anywhere near that number, as far as interest rates go, values are going to go up, because now your 3.5% rate is going to be, you're going to be able to afford more house, right? So now you're going to be able to afford a higher priced house, a bigger house. There's going to be more people who qualify because the rates are so low that they're going to be able to get in the market. So if rates go down to 3.5%, you guys better believe home values are going to go up. There's going to be a ton of competition, and it's going to be nuts for people who have already have a house, already have a mortgage. It's going to be great because you're going to be able to refinance and save a bunch of money. So if you're already a homeowner, you're in good shape, you're set, you're looking pretty. But if you just bought a house, also you're looking good. If you're buying or are in escrow in the next 30 days, you're looking good. But if you're one of those people who's like gonna buy in 6 months, get ready for a shitstorm, because you're gonna have 20 offers on every house, and you're gonna have a lot of competition because everyone's gonna be able to buy because rates are so low. Okay, so that's basically what's going on. And Trump just announced this news yesterday, so it might take a couple of months for it to take effect, to get the right person in charge, and kind of take the necessary steps to make this happen. But it's gonna happen if Trump wants it to happen. So that's what's going on. I have my coworker Norv here, who is an expert actually when it comes to this stuff, the stock market, finances, and things like that. He knows much more than I do. So he's gonna hop on and give us more detail as to what this actually means. This one right here. So to everyone who doesn't know, this is one of our loan officers, Norv Hakopians.
How's it going?
So he's first time on camera. He's a little bit nervous, so let's be nice to him, okay?
Yeah. No pressure at all.
But Norv, he's been in the financial industry. He's an expert, okay? Like I claim to be a mortgage expert. Norv is a expert in the financial industry.
It's a little bit of a stretch, but I'll take it.
No, it's not a stretch. Trust me, this guy. If you listen to this guy talk on the daily, he knows what he's doing. So just take us away. Tell us what's going on with Trump. What is he doing?
Yeah, so
and what does that mean?
Yeah, so you kind of nailed it on the head as far as Trump's plans and the Federal Reserve. So Roger kind of nailed that. What he's planning on doing is giving access to cheaper financing and kind of providing quantitative easing to the market so that borrowing costs remain lower. It adds stimulus to the economy, and by doing that, it'll create this kind of artificial boost in the sense that it'll just kind of create a more stimulus to the economy, where it'll give the stock market a boost, real estate prices a boost, like Roger said. Home prices would kind of increase from here as borrowing costs become lower. People can afford more home, so therefore you'll see a kind of a run up in the economy on all aspects of the economy, from Wall Street to real estate and
so like economy's gonna get, stocks are gonna go up, wages, home values are gonna go up, wages are gonna go up, earnings are going to go up, companies are going to make more money.
Yeah.
It's going to stimulate the economy.
Absolutely.
And then you said quantitative easing. So
Quantitative easing.
explain to us, like we're 2 years old, what quantitative easing means.
So it's just adding money, money to the overall
To the economy.
yeah,
Adding money, printing money.
Printing money, really.
Okay.
Yeah, that's what they're
That's what it
doing,
means.
buying bonds, and so creating. By doing so, there's more money, so financing becomes cheaper, borrowing costs go lower. It allows large corporations, Fortune 500 companies, to borrow a lot cheaper money, so
Gotcha.
therefore they can expand their businesses at a lower cost, add more employees, wages will go up, earnings will go up. So it's kind of, in a sense, it's done to if there's fear of a recession, to kind of mask it and allow for the economy
Give
to
it
kind
more of
of
a
give it a
boost.
boost.
Okay.
So whether the timing is right, so the market's at all-time highs, real estate's at near all-time highs, actually all-time highs.
Yeah.
So this comes really the pressure from Trump to the Fed is kind of basically, I think he's trying to curb the recession that we may be nearing
Okay.
based on the global slowdown and the
Okay.
tariffs. So tariffs aren't going as planned. The talks with China aren't going as planned, and as well, as quickly as they anticipated. And then there's the
Gotcha.
global slowdown. So he's trying to boost it. Whether all that pans out, and if this pressure that he's putting on the Fed kind of works out, he's a master negotiator. So it might just work out in his favor. But
Okay, cool. Okay, so the economy is going to get better. Rates are going to go down. Companies are going to make more money. Okay, so they foresee that there's a slowdown in the economy. So to get ahead of that, Trump wants to boost the economy to keep it going. Now, it sounds a little bit artificial. Are there any downsides to making this happen?
yeah, the downside would be a bubble. A
bubble.
bubble
Okay.
both in real estate and Wall Street. Let's just say, quantitative easing is done. They put out $1 trillion out there, and the stock market picks up, real estate picks up, but it gets to a point where it starts to stagnate, and inflation becomes a problem. Costs of living go up, and the market starts to slow down. Hiring cuts.
Unemployment.
Like you said, unemployment, and then there's real estate, and buyers just can't afford to buy the home anymore, even with lower rates. So then you're kind of at a stalemate where it's not affordable, even with the lowest amount of rate that you can possibly get in the market. So then
Right.
you'll see a little bit of a bubble,
Prices coming back down.
crash, real estate, Wall Street, and all that. So
All right, guys. So quantitative easing. Trump is lowering rates. He wants to stimulate the economy because he foresees that there's a slowdown, there's a recession coming, and he wants to kind of give it a fucking turbo boost for the next year or two to kind of keep it going. Trump's a businessman, so he's gonna do what he's gonna do, and it might be good in the short term. We'll see what happens in the long term. We'll see if it actually ends up backfiring and there's a huge bubble, or like 2008 or whatever the case. In the short term, if rates go down and borrowing becomes cheap, it would be a good time to get into the market, to get in and buy a house.
And just to clarify, I think even if this were to go through and it does create a bubble, it'll be a while until
It'll be a while.
we get there. Yeah.
So there's going to be like a run up for like a year or two or more.
Probably.
Okay, got
It's
it.
kind of hard to tell, but it'll be a
Yeah.
while. Yeah.
I guess you guys are just gonna have to stay tuned and see what happens. But that's what it looks like is happening. So if you bought a house recently, if you own a house, that's going to be good news for you. So if you own a house, you're going to be able to refinance and lower your rate if rates go down, when rates go down, because it looks like it's going to happen. If you own a house, you're going to be able to refi and lower your payment. The other thing that's going to happen is if you are going to buy in the next 6 months, there might be more competition. If you bought right now, it's probably a good time because values are going to go up. So anyway, thank you for coming on,
Yeah,
bro.
Sure, man. Anytime. Thank you, man. Thanks for having me on your
Thanks
live.
for watching, guys. So we'll have another weekly update next week. We'll keep you guys informed on what's going on with the overall economy. Now that we got Norv, he always fills us in the office behind the scenes. What's going on with the economy, finances, stock market. So it's always good to have that knowledge because that ties into mortgages and houses and the overall economy. So thank you guys for watching.